How quickly will rising mortgage rates impact the surprisingly resilient home buyers this spring? The interest on a 30-year fixed mortgage today is approaching 7% again. Just a few weeks ago, we dropped under 6. Almost a 100 basis point move in rates has significant impact on payments and affordability. So you have to assume that that means fewer buyers in the market. The question is, where in the data do we see it first, and how long does it take for higher mortgage rates to sink in before those buyers back off? Well, we did observe fewer homes going into contract this week as new pendings. And that's perhaps the first sign. Buyers who have been active in the market already this year, maybe now they're saying, since rates jumped from 6 to 7%, maybe I'll wait to see if they fall back down before I lock in my payment. Slightly fewer homes take offers and go into contract as a result. And we can see that maybe that first data point in the pendings this week. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. The data we cover here in these Altos videos are national, but Altos Research covers every zip code in the US. If you need to communicate with buyers and sellers right now, there's a link in the description below for you to join us and dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what we know for late February 2023. As I mentioned, new pendings are 6% fewer than they were last week. We tracked 55,000 single-family homes go from active listings into contract this week. That's down from 58,000 last week. So this is one data point, but if you were to look for signs that home buyers react to a sharp increase in mortgage rates, this might be one place you'd see it. So if your potential payment jumps big in 1 week, then maybe you hold off and don't make the offer. Remember, this is the opposite of what was happening last February. That was when rates were in the 3s, but quite obviously headed higher. And the buyers at that time knew they had to accelerate their offers. Now maybe you wait. So in this chart, each bar is a week with the total count of single-family homes in contract stage, pending. They were listed for sale, they took offers, they accepted one, and are now in that 30 to 60-day window between the offer and the closed transaction. The light portion of the bar are those that are newly pending each week. It's hard to see a 6% smaller portion of bar week to week, but that's what we have. This is notable because pendings have been increasing each week so far this year. The total number of homes in contract continues to climb. 306,000 single-family homes are in this pending stage right now. And you can use this chart as a leading indicator of home sales across the country. These sales will close in March and April. At the right end of the chart, you can see steady recovery in the number of home sales that we've had since the very low start of the year. It's spring, so even if this recovery pace slows due to the higher mortgage rates, the total number of homes in contract will keep climbing through June. There's just more transactions that are happening now. Again, this trend now is notable because it's not just seasonal, it's more than seasonal. And it's a recovery from the over-seasonal last fall. This week, while we had fewer new pendings, they also had fewer completed sales for whatever reason, and the total pendings count continues to climb higher. Like last week, we have 23% fewer homes in contract now than we did last year at this time, when we were at the end of the tail end of the pandemic buying frenzy. If a contract fails and a home gets relisted, it comes out of this chart and gets counted back in the active inventory chart. And active inventory is still falling each week. The available inventory of single-family homes for sale in the U.S. fell by 1.5% this week to 436,000. This is a market where sellers are very hard to find. We have some demand, and few sellers, so inventory keeps falling. The weekly inventory decline is slowing, though, meaning that supply-demand imbalance is getting a little better as we get into spring. My guess is we probably have 2 more weeks of declining inventory before we see the bottom of the curve for the year. If inventory keeps falling into March, that would be the next surprising development of an already surprising new year in housing. In normal years before the pandemic, inventory would be climbing by this point. So this is why we've been surprised at how resilient the housing market has been so far. I've highlighted 2019 here. The low point of inventory in 2019 was early in January and then again early in February. By late February, inventory had been climbing in 2019 for a few weeks, and there were over 820,000 single-family homes active available on the market for buyers. That's almost twice what we have available today. And so we used to have much more inventory, much more supply, and it would be growing by now. As recently as New Year's this year, I expected this year to behave much more like 2019 than 2022, but I was simply wrong. So here's how you know this supply crunch is from a dearth of sellers. There were only 55,000 single-family homes newly listed for sale this week. That's 24% fewer than last year at this time, 24% fewer. Last year, we also still had the pandemic bidding wars and immediate sales. So where last year we had not many sellers and huge demand, this year we have even fewer sellers and in just sort of modest demand. In this chart, each bar is the total count of new listings in a given week. The light portion of the bar here are those that went into contract essentially immediately after a listing, what we call the immediate sales. And what you can see is it's remarkable how the sellers shut off after July 4th and have not returned. Homeowners in America are holding on to their ultra-cheap mortgages. Like, why sell the best financing deal ever? Even if I'm buying a new home, we can see that like many Americans are not giving up the existing home that has that 2 or 3% mortgage. I think that's what's going on here. We can hypothesize that American homeowners are locked into their ultra-cheap mortgages, and we can also see it play out in the data. At the right end of the chart, you can see how few home sellers are coming out each week. We don't yet know how completely the 7% mortgage rates will cut off demand or quickly, like it did last summer and fall. We have plenty of buyer momentum right now, and we can see that in the price reductions data. Currently, 31.3% of the homes on the market across the U.S. have taken a price cut. This shows dramatic improvements in the relative levels of demand from last fall. See how steep that dark red line is falling here? If last spring and summer was notable by how quickly home sellers were cutting prices, the reverse is true now. So the light red line is the curve from last year. In normal times, about a third of the market, 30 to 35%, take a price cut before they sell. In recent years, it's been lower than that, and March is the point at which fewest price cuts are happening because that's when all the new inventory is listed and they don't have to take a price cut until maybe later in Q2 if they haven't sold yet. So in the last 2 years of pandemic craziness, though, 30% thought they were overpriced, but only 15% took price cuts because a lot of them got their offers. We had bidding wars and insatiable demand. Then last summer, we can see that abrupt change in demand and buyers stopped cold. Now we see the inverse happening, and where we can see more homes on the market now that have had price cuts than recent Februaries, right? There's more now. It's still recovering from last fall. The slope of that curve shows us how quickly that market is returning to normal. So now what happens if rates stay at 7% or go higher? They could go higher because the economy has been reporting such strong growth numbers on almost all fronts. So watch price reductions as a gauge of how quickly demand gets cut off. The dark red line curve here, this curve, it'll curve flat and then start rising. But does it get under 30% first? Do we get back into that cluster of recent years? Or does it reverse and head higher like last year if buyers are really sensitive to rates at this level? One reason that sellers don't have to cut their prices is that they're starting at more reasonable levels, asking prices. So the median price for single-family homes in the U.S. this week is $419,900. That's up just a fraction of a percent from last week. Home prices always climb in February, but this year's slope is very modest. Last year, prices were spiking each week because sellers knew the buyers demanded it. You could see the trajectory of the dark red line here at the far right is going to peak lower than last year's peak. And that pricing is almost always, that June 30 peak June 30 is almost always the peak for each year. So you can also therefore gauge the future of home sales prices by watching the light red line here. That's the price of the newly listed cohort each week. Of those 55,000 new listings, see how at the right end of the chart that light red line is going sideways? That's home sellers telling us they know exactly where buyers are buying. At $393,000, the price of the new listings is essentially unchanged from last year at this time, like a year ago. So 0% change from a year ago. So home prices are flat, and in next few weeks, you can even expect it to be lower, prices to be lower than where they were a year ago. And that's why we can pretty confidently say that for the whole year of 2023, prices are at best flat. Even as the supply-demand imbalance exacerbates this spring, demand is at very clear price points. Affordability is an important factor for home buyers, and you can see it playing out right here. At Altos Research, we track every home for sale in the country every week. As I mentioned, these videos are national, but we cover every zip code in the U.S. If you need to dive in right now to get your local data, because your local market may be behaving very differently from the national, go to altosresearch.com and book a free consult with our team. We'll help you interpret the crazy market for your clients right now. This is a critical time to be properly informed about the market. Join us. More next week.